The next biggest winner is brought to you in part by Welcome back to the next biggest winner. Today we're speaking with top-level management of two public companies to hear why they think they're worth your undivided attention. With me now, Bob Cariglia of DealNet Capital. Bob, welcome to the show.
Pleasure to be here, George.
So, Bob, you've got an interesting company here. You're a merchant banking firm. You're putting together a portfolio of investee companies, and you're specifically focusing on recurring revenue companies. Why recurring revenue companies?
Well, recurring revenue companies, it's a great way to build your book of business. As you add additional contracts, you're typically looking at 3 to 5 year multi-level or multi-year contracts.
Right.
And as you add to your business, you simply grow your revenue year over year.
Give me an example of the kind of recurring revenue companies that you're looking at.
Well, we look at service companies that get long-term contracts with their clients, business process outsourcing companies.
And business process outsourcing for people at home, what's an example of those kind of BPOs? What's an example of a BPO?
Well, typically it's a company who focuses on processes and on technology to provide customer service to clients.
Right.
So if someone has a lot of clients, we would take over, or those BPOs would take over their clients, look after them from a customer support perspective, do back office processing for them, and you typically sign a multi-year contract with those clients to get that.
So it's a great business plan. You're focused on recurring revenue, which is cash, which is very important in today's economy.
Absolutely.
How much success are you actually having in executing that plan right now?
Well, good. Well, our first acquisition was a company called One Contact, and it was a BPO. We have call centers here in Toronto. We've got one in Reno, Nevada, and we've got another one in Fort Myers, Florida. The beauty of that company is it had an existing book of business, and we're building on that book of business. So with that company, we got we got technology, we got management, we got everything we needed to really be able to provide services to an extended group of companies going forward.
Now, playing devil's advocate for a second. I'm a successful business, I've got a recurring revenue. I'm not, which typically means I'm not cash starved or looking for funding, VC funding to keep me going. At the end of the day, why do I agree to be acquired by DealNet?
Well, what we provide is we provide capital, number one. Number two, we provide seasoned management. A lot of us have been in this industry and other industries for a long time, and so we're able to bring a lot to the table to support our portfolio companies. We also bring technology, we bring services, and we also bring the 3 call centers, which we can crank up to service their businesses right away. And that gives us great scalability and allows us to really focus on those companies and how to grow those companies without them having to worry about how to do it.
Right, because growth, I guess, is always a challenge, no matter how good a business is, and
Exactly.
You're bringing that to the table.
Exactly.
Tell me about the focus that you've had lately on the HVAC business, on the heating, ventilation, air conditioning.
Well, one of our strategies was to take a look at underserviced industries, and the HVAC industry really is underserviced when it comes to companies that provide services to those companies in the HVAC industry. What we liked about it is there's about 84,000 dealers in North America who provide HVAC sales and installation. 84,000, and they're of different sizes. Sure. Some of them are 2 guys in a truck, but some of them are nice established businesses. They might have multiple sales personnel. They might have a number of installers. But what those companies are good at is they're good at quoting and installing and designing HVAC system for residential applications. What they typically aren't able to do is they really don't take care of their back offices. So we're able to go into those companies and provide them with a full suite of services, including financing. And that's critical, because very often those companies are there to close a deal with their respective clients. Right. They ask, will it be cash, will it be charge? Now they're able to say it can also be a rental or it can be a financing option, and that's what we provide.
So if I understand that business correctly, that means you need to borrow a lot of cash in order to get it out there and help these companies with these HVAC companies with their sales and with their rentals, things like that. So
we do.
How do you source those funds?
Well,
and that's a tremendous. And how much are you typically sourcing?
Well, our management team, we've got some great experience in sourcing funds. We're working with various underwriters. We're working with various institutional investors who are looking to find fixed incomes, places to put their money to get a fixed income. And what we're able to do is, borrow from them and put together some long-term underwriting ability, and then we source from that those funds to be able to reloan them to the HVAC industry, and so that we can help our clients expand their businesses.
And so essentially, you're making the bulk of your money for this on the spreads.
Well, we make money on the spreads, but we also make money on the services that we provide to our clients.
All right.
Marketing services. Plus the financing services as well.
So talk about the spreads. I don't know how specific you can be. If you're borrowing money at 5 to 7%, can you give us a range or an idea of how much you're typically loaning that money out for to help these companies grow their businesses?
Well, I couldn't get specific about the actual, rate, but I can tell you that our rental rates are very competitive in the marketplace, and we can be very flexible to make sure that we're providing the right financing for the right deals for our clients.
Let's talk about the split. So you've got service revenues on one side, and you've got the money that you're loaning out on the other side. What's the split at the end of the day for your revenues? 50-50? Is there one that is bigger than the other?
Well, we draw revenue from three areas in the company. One is we've got a great group of existing customers in our BPO business, One Contact, and so we draw revenue from those. And those are a lot of North American, large retailers and banks who use our services. So we draw recurring revenue from them month over month. Typically, we sign a 3 to 5 year contract with them. That's one way that we get funds. And then in the HVAC industry, we're selling our services, whether they be call center services, marketing services, lead generation services. That probably accounts for about 40% of our revenue, and the other 60% comes from the financing side.
How have you been doing on the top and bottom line over the last couple of years?
Well, it's it's great. We enjoy a very good gross margin, and we're a growing company, and we've been reinvesting a lot of our money and building our team. So bottom line, we're growing that as well. From a gross margin perspective, we're typically looking at about 30% across the board.
That's a great business going forward.
It is, absolutely.
Bob, thanks for joining us. Fantastic business. Stick around for the roundtable discussion.
I look forward to it. Thank you.
We're going to cut to commercial and be right back with our roundtable discussion. The next biggest winner is brought to you in part by